Today, we're going over the low delinquency in homes. Let's get into it. Thank you again for joining us and listening to our podcast. So we're going over mortgage delinquency rates. They're actually quite low right now, and there's a few reasons for that. Now, one reason is we have really high equity.
Oh, absolutely. There's been a ton of equity. As a matter of fact, from the baby boomer generation who helped to spark this all off, I mean, they've really created a lot of high equity in homes. And then over the last 5 to 10 years here, we've seen a large increase in equity due to the unfortunate real estate crash in the early 2000s. So, a lot of people were able to buy during that time, and, they were able to buy at a fraction of what these homes are selling for today.
Yeah, and even some of the statistics here from the National Association of Realtors, which we are a part of because we're both licensed realtors.
Absolutely.
That home sales are actually down by 34% as compared to January of last year, looking at this year. So even just that simple sort of supply and demand aspect is within that.
Yes. I mean, if you got more supply, price comes down.
Yeah.
If you have less supply, the price goes up. And I mean, right now, we still have a pent-up demand. During that period there, historical data shows that there was something to the tune of 8 million homes that were not built during that era.
Yeah.
Guess what? Population kept growing, and we've got a lot of people that may still be living at home that are ready to get out and have that home of their own.
Yeah.
Which is definitely helping to keep the values up and keep delinquencies away.
Yeah, sure. No, that's absolutely true. And I think too, as of right now, at least, we see not as many risky products from the lending industry being put out. Like the big sort of boogeyman back in the '08 crash was the adjustable rate mortgage, the ARM.
Oh, in addition to that, and you had a lot of fast and loose lending, products that came out of that era and lessons that we learned. The big one there is that real estate agents and appraisers and lenders and appraisers don't talk, they don't golf, they don't go out for drinks together anymore.
Yeah.
So there's a separation there that was brought on to us from the Frank Dodd Act, if you all would like to look into that a little bit more.
Yeah.
So it really separated a lot of things, and it wasn't, hey, you're my friend and I need this to appraise because you want more deals coming your way, right? So,
so the good old boy system's kind of gone.
System's gone with the wind,
Yeah.
and hey, it seems to be better for everybody this way because we're getting actual values on houses now, and we're not putting people into situations that they probably shouldn't be in from, some folks that maybe lacked a little bit of integrity.
Hey everyone, we want to interrupt this episode to let you know that we are a Keller Williams Southern Arizona franchise.
We are also realtors practicing equal housing. Now let's get you back to the podcast. Sure. Yeah. And like the biggest problem with that '08 crash was it was housing based, and it was the fog of glass loans and the good old boy. And,
absolutely.
And all that stuff. So that's what we're actively trying to avoid in the future. And we kind of learned our lesson there. And that's one of the reasons why lenders sort of tightened up the belt and said, we're not going to, the dead horse loans sort of things are gone.
Yeah.
Because that hurts everybody.
It's great. Yeah. You're absolutely right. Not only does it hurt the one market in particular, but it hurts our economy as a whole.
Yeah.
I mean, some folks may or may not realize it, but I think, and don't quote me on this, but I think real estate as a whole is the number 3 largest global economy in behind oil and technology, of course.
Yeah. So that's pretty big.
Yeah. It's not just a Tucson, Arizona thing. It's a everywhere thing.
Yeah. Yeah, no, absolutely. Our last point is people just aren't missing their payments as much.
Yeah.
We have, just because of the facts that we've stated, that we have high equity. They're highly qualified buyers because they've been vetted thoroughly through a lending process. And so that therefore the delinquency rates are going to be lower just because, they're a high quality person who should be able to own a home.
Absolutely. And, it's great that the lenders are doing that. So, I mean, not only are you getting your initial check up front from the lender, but you're also going through the underwriting process, and it's getting double checked and triple checked to make sure that you'll be able to maintain the payment through the life of the loan. Now, of course, there are those anomalies, those unforeseen things that pop up in life that we don't know are coming. For the most part, though, if you're getting qualified for a loan, you're good to go for the next 30 years.
Yeah, and there's also really good products from your lender. If you say, oh, crap, I just lost my job, you could go to them and say, hey, will you work with me instead of immediately foreclosing, because they don't want the house.
No.
They'd rather have you in it and paying the mortgage on it.
Absolutely. And it's funny, I had a friend recently that went through a similar situation to where they had some unexpected things come up with some family, and they were actually able to call their lender and get their payment changed from the 1st of the month to the 15th of the month.
Ah, that's great.
So it's great to know that there are things like that out there to help people further along.
For sure, yeah. And there's even products like mortgage insurance
Yes.
that you could pay tacked onto your monthly fee, basically. So if anything does happen, like with injury or you lose your job, that your mortgage is actually getting covered. So that might be something that you want to talk about with your lender. So that's something that we could suggest as well as real estate agents.
Absolutely. I know several great lenders here in the area that would be more than happy to talk with anybody and answer any type of questions.
Perfect. Well, thank you, Daniel. I appreciate you allowing us to pick your brain on this subject. And
Joe, I appreciate you allowing me to pick your brain on the subject.
hey, we work together. We're a team, and that's how that
Absolutely.
goes.
That's how it's supposed to go.
Well, cool. Well, thank you, guys. We'll see you on the next podcast. If you like this podcast, be sure to hit the like button. And if you want to hear more, hit the subscribe button so you get the little bell up at the top. And we will see you on the next one. Thank you for listening and watching the Nitty Gritty of Real Estate podcast here with the Tom J. Krieger team of Keller Williams, Southern Arizona. If you are interested in buying a home, selling a home, or even investing in real estate, we have 5,000 agents across the country that we can connect you to. If you need any free resources, feel free to check out our website at www.thetjkteam.com. We hope you have a great day.